Welcome back to the Market Minute, where we cover the market components that impact your investments and what you might expect when purchasing or financing a home right here in Florida. My name is Brent Starts. Let's dive right in. Several noteworthy reports were released this morning, the first being the Personal Consumer Expenditures Report, which came in hotter than expected. In other words, it was inflationary slightly. So the markets breathed a sigh of relief that it wasn't way off as far as the estimates are concerned. That release coincided with the Chicago Purchasers Management Index, which was an index and it's a survey of purchase managers in Chicago. That reflected a slowing of the economy. In other words, purchase orders were down, inventories were up, that type of thing. And so the combination of those two things pretty much made the market react flat. There was not a large response, either negative or positive. The consumer sentiment released by the University of Michigan came out at 10 a.m., and that report came in lower than expected, much lower actually. So the consumer sentiment is, in other words, the feeling that consumers have right now is the economy is beginning to slow down. To that report, the 10-year Treasury started to back off. We were at 3.8% on the 10-year Treasury. It dropped to 3.69, which is interest rate friendly for mortgages. So bottom line, realtors, if you're in escrow with your clients to purchase a home, you can probably float into the weekend and early into next week as additional reports come out this upcoming week. The jobs report comes out on Friday. That's a market mover. We want to keep an eye on that. But if you're in escrow to purchase a home right now in the process, you can safely lock sometime in the next 2 or 3 weeks as you go through the next week's reports. You can float right now. Long term, we see what the market's saying to us right now. Basically, the 10-year Treasury responding long term that they think that the Fed actions up to this point have really taken effect. And we see long-term interest rates starting to level out and possibly starting to retract into early next year. So if you found this video helpful, drop a like below and be sure to subscribe to our channel. And for the basics of the mortgage industry and real estate and purchasing a home, you can go to our Lessons in Lending series. You can find it right here. And for the previous Market Minute, you can go right here. My name is Brent Starts with Unitas Lending, and we'll see you on the next video.